oil remains the big story. But first up, let's take a look at the Asian markets. Well, Asian markets, all of them trading lower following a weak handover from Wall Street. Also remember, WTI crude for May delivery fell more than 100% to settle in the negative territory, meaning producers would pay traders to take oil. And that's why we are seeing big declines coming in. For instance, Hang Seng has fallen more than 400 points. We are seeing declines of around 200 points on Nikkei. We also have Shanghai, which is trading with cuts of around 0.8%. And that is what is happening across all the Asian markets. In fact, SGX Nifty as of now is also indicating that we will start the trade in the negative territory, indicating a cut of around almost 106 odd points. So we are bracing ourselves for a negative start as far as the Indian markets are concerned. But of course, let's take the discussion forward. Crude oil is the big talking point. The May WTI crude contract, which plunged to a historic low into negative territory, is sharply higher now. And we have Manisha Gupta joining in to discuss about the oil price collapse. Manisha, hi, good morning.
Hi, morning, Sonal. Well, yes, we've had one night, haven't we? Because we have seen the crude oil prices turn negative, more than 100% of a decline. But that is ahead of the expiry today. So you are looking at lower volumes. It also was about long squeeze, people who were holding crude. And as the front month converges with the physical markets, nobody really wanted to buy crude because remember, we have a supply glut right now. The demand is absolutely absent because of the coronavirus pandemic. There are shutdowns. Nobody is driving around. The aviation is shut. The transport, travel is shut. So there is no crude demand really. If you look at the May futures, that would expire today. But when you look at the June futures, which is more active and has higher volume and participation, that price is still holding above $21 per barrel. So in the U.S. markets today, you will be back at $20 when the front month turns into June. But the demand concerns are very much there. As per the IEA report, we are down 35% when it comes to demand for the month of April. The shutdowns because of coronavirus are one reason. And the brief, ugly oil war that the Saudi Arabia and Russia did also led to a very sharp decline in prices. So even as the OPEC and allies are going to cut output by a historic 9.7 million barrels from 1st of May, markets believe that until then, you will continue to see supply increases. And with the way that we are going, it would be by mid-May that U.S. will have no storage capacity at all. In the global markets as well, there is a belief that more than 70% of storage capacity already is taken. And if the speed continues as it is right now, then we are perhaps staring at actual negative prices going forward. So while, of course, it has been a volatile day, one historic day that we witnessed yesterday, markets do believe that some stability will come in today as June comes into trading. But yes, further pressure, more volatility and concerns about crude demand going forward will still continue to play higher.
Thanks a lot, Manisha. Absolutely a historic day. None of us would have thought that something like this would happen. But in that case, here is some opinion from Citi's Edward Morse on this big drop in crude prices and what may have led to this historic event. Listen in.
This is a combination of two factors at work. One is the movement toward tank tops at various parts of the world where oil is being stored. Cushing's not technically at tank tops, but enough of virtually all of the remaining storage is already contracted out, so nobody can buy into it. So that's one critical move. It's not going to disappear anytime soon. We'll see what happens with the next expiry. And the other factor is the kind of shift in holdings of the contract. So we now think that ETFs are holding around 25 to 30% of the open interest in prompt contracts, and that certainly must have been a factor at work today as we've gone into this roll period of time. Forecast is that things are going to get worse, actually, before they get better. And yeah, Brent is partially reflective of markets, and we think the dated Brent market is getting weaker and weaker, and we would not be surprised to see Brent averaging in the teens for the quarter as a whole. So the worst is yet to come. On the other hand, if the coronavirus turns out to evolve in the same way that it has in China, when we get to the rest of the world where we think there's something like 4.3 billion people currently in lockdown of one sort or another, will be over when the coronavirus starts to lead to a recovery and a recovery in transportation and fuel markets. Even believing, as we do, that there'll be some cheating around the OPEC cuts come July and into August, this massive increase in inventories is going to be followed by a massive decline in inventories.
And following the historic oil plunge, Wall Street ended with deep cuts. The Dow was down by around 600 points, the Nasdaq lost 90 points, whereas the S&P was lower by 50-odd points. However, as oil prices bounced slightly off the lows, the futures market is seen rising, and we are seeing the Dow futures is now up around 100-odd points. But let's get in Courtney Regan, who will get us a wrap of all the action on Wall Street.
Stocks selling off in the U.S. after a historic plunge in the price of U.S. crude oil. The Dow dropping 592 points, the S&P 500 off 51, and the Nasdaq falling 89 points. So how bad are things in oil? Well, a futures contract for May delivery of crude fell more than 100% to negative $37 a barrel. In other words, oil producers looking to deliver crude in May actually have to pay traders $37 to take that oil off their hands. That's the first time in history that's happened. While June contracts are still trading at around $22 a barrel. Today's move is a sign that there's far more supply in the market than there is demand. Meanwhile, Senate lawmakers failing to reach a deal on additional small business relief funds. Yesterday, Republicans and Democrats said they were nearing a $370 billion deal that would help replenish the Paycheck Protection Program, or PPP, which ran dry last week. However, there could be another vote set up as soon as tomorrow afternoon. And Shake Shack is returning the $10 million relief loan it received through the PPP after raising additional capital through other means. The CEO telling CNBC the company has ensured long-term stability and is giving back the federal aid to help friends in the industry do the same. That's the action from the U.S. market.
All right, let's turn attention to the European markets. Then they, however, ended in the green. The CAC was up around 40 points. The DAX also gained 50 points, and the FTSE was up around 25-odd points. So markets were basically focusing on rising coronavirus tally globally and the deep gashes in the crude market. Meanwhile, economic data out of Europe on Monday showed that the Eurozone's trade surplus with the rest of the world grew to 23 billion euros in February, up from around 18.5 billion euros last year. Separately, an IHS market survey revealed on Monday that a third of UK households have already suffered a drop in income because of the coronavirus crisis. So that is the update for European markets, but it's time for a quick break. Up next,